One of the president's proposals to tackle the housing crisis is a 50-year mortgage. Let's bring in Senior Director of Government Affairs for the National Taxpayers Union, Tommy Aiello. It's great to have you on the show. Obviously, the intended aim here is having more time to pay off your mortgage. Here's how the president describes it. Take a listen to this.
It's not even a big deal. I mean, you know, you go from 40 to 50 years, and what it means is you pay something less from 30. That some people had a 40, and then now they have a 50. All it means is you pay less per month. You pay it over a longer period of time. It's not like a big factor. It might help a little bit.
It's getting a lot of buzz, but Tommy, it sounds like you're a bit skeptical. Why?
Well, good evening. Thanks for having me. Let's just start by saying, look, the administration, they're listening to the needs and the concerns of the American people about the affordability and accessibility of home ownership. Just look at the data. The average first-time home buyer's age is over 40 years old. Foreclosures are up 20% just this month, so it's a real concern. Now, the 50-year mortgage, it sounds good on paper, but if you look into the details, it's a little tough. Right? You're paying about 10% less per month, which is a great thing, but you're extending the life of your loan over that extra 20 years. So you're paying an extra 20 years worth of interest on that loan over the long term. It actually will hurt borrowers and not make housing more affordable.
And also, what about the supply of housing and interest rates, as you're suggesting there as well? A lot of questions from economists. So for many homeowners, as you know, the goal with purchasing a home is to build equity. So aside from a larger down payment and aside from paying more in principal each month, perhaps, are there ways that could be maximized with that 50-year mortgage?
Look, you know, I am a renter. I hope to own a home one day, as do a lot of your viewers. I think when it comes down to home ownership, there's a couple of things. One, we need to continue to bring interest rates down. Doing so will make refinancing and financing a mortgage that much cheaper. It'll save about $200 a month for every point dropped in interest rates. That's a big deal to a lot of people. But then there's all these barriers put up by the state and local governments that make it impossible for developers to come in and build condos and standalone housing. So the sooner we could address those concerns at the local level, the better it'll be for everybody, so we can bring more housing supply online and lower costs across the board in a proven way.
The Federal Housing Finance Agency director also said that the Trump administration is considering a portable mortgage. So if you bought a home during the pandemic and then you moved and you get to keep those rates, you hear it, it sounds great, the appeal makes sense, but is it feasible? What are your thoughts?
You know, this is actually very popular in other countries, so I think it's great that we're continuing to look at alternatives to the current system, but there's a lot that needs to happen at the federal level to address some of the laws and the legality of it. But then when you look at it for a consumer's perspective, they actually might be paying more upfront on an interest rate than they otherwise would have with a conventional 30-year mortgage. And that's because a lender has to look at the rate and say, this person's going to have the rate over the course of their life. So we need to charge them a little bit more to make financial sense for the bank to issue the loan.
Well, you mentioned that this is happening in other parts of the world. I believe Canada is on that list, correct? Would this be feasible with the way that our market is structured?
You know, in the short term, probably not. I know the FHFA is still looking at this and the possibility of it. That's going to take a lot of time. There's a lot of plumbing in the back of our financial system that keeps mortgage rates affordable, somewhat affordable, and also keeps bank liquid so they can lend out to other things. If we change that overnight, it's going to have a real draining impact on the financial system and might actually dry up liquidity for people to get that mortgage.
All right, stay tuned on that interesting concept. Before I let you go, looking ahead to December, the chances of a rate cut then still uncertain. At this point, what are your expectations for the housing market?
You know, I think the housing market is in very good shape still. People's balance sheets are actually pretty strong. I wouldn't bet on another rate cut in December. Into 2026, we might see a little bit more, but the data so far just doesn't point to a next rate cut in December.
All right, Senior Director of Government Affairs for the National Taxpayers Union, Tommy Aiello, thank you so much for joining us on the National News Desk.
Thank you.